With more than $1 trillion in assets under management, Northern Trust's chief investment strategist, Joseph Tanious, is the one we want to talk to about this. Joseph, look, it's not like these companies aren't doing major business. AMD just launched Helios, its first AI rack system to rival NVIDIA's. Microsoft announced that it will this morning deploy Helios in its Azure data centers, joining other early customers. Meta, OpenAI, Oracle. Are you in the camp that's starting to worry again that too many cards are piling into OpenAI and Anthropic at the very time Chinese AI models are flourishing and cheaper to use?
I think there's plenty to worry about. And I think, Liz, we are still in the early innings of this AI transformation. And along this journey, if you think about it, and you look back at previous examples in history where we've seen meaningful advancements in technology, looking back at the tech boom in the early 2000s, or looking back at the creation of the personal computer in the mid-1980s, right? There was some meaningful consolidation. I expect that to continue to be the case this time around. However, we continue to believe we're in the early innings of this. And I think the demand for compute and what's happening with chip makers and semiconductors, this is just the beginning. I think you're going to see it this earnings season and every earnings season over the next couple of quarters that demand for AI is just continuing without slowing down.
Are some of them more vulnerable? And I'm thinking of Oracle, which hit, I believe, around a 2-year low this morning. And for some reason, it's sort of ground zero for the concerns because it sells so much of the compute in the cloud to a lot of customers. And therefore, it's sort of in that, well, bitter spot, not sweet spot, of what could be this circularity problem. Are some more exposed than others?
Absolutely, without question, some are more exposed. And I love the root of that question. What you're asking here and what you're pointing out is that it's no longer an AI trade where a rising tide is simply lifting all boats. If you look back into 2025, that was really the case. Everything and anything tangentially related to artificial intelligence and just this boom in this AI engine and AI train was reaping the benefits. Today, and this year in particular, that is not so much the case. So I expect as we continue to go throughout the year, you're going to see more winners and losers. You're going to see markets differentiate and be more picky and discerning about which companies they want to have exposure to. And this is why I believe as investors, it is really important and crucial that at this time, we listen very closely to earnings. We try to tease out what are these companies telling us with respect to guidance? What does their revenue growth look like? And of course, what's happening with their profit margins?
I mean, Lumentum jumps out at me right here. Lumentum is up 5%. No real news on this company. I mean, they're the ones that develop optical and photonic technologies. They're the ones who transmit the data at super fast speeds that answer all of our queries and questions. So you've got that. You've got the CoreWeaves of the world, and then the debt. That is what I think gets some people nervous. A lot of debt being issued here. Morgan Stanley is believing that there's going to be an insane amount of debt. Something like, we're talking about last year was $100 billion. Now it could be just for the hyperscalers, $130 billion to $150 billion. Overall, the debt issuance could hit $570 billion this year.
You're 100% right. Whereas before, over the last couple of years, a lot of this CapEx was funded by internally generated cash flow from these hyperscalers. They are now reaching a point where they're having to tap the markets, right? The equity markets and, of course, the bond markets. This is simply exacerbating the issue with respect to concentration risk. If you take a look at issuance in the bond market over the course of this year, a meaningful portion of that is related to AI. I think as investors, we have to take note of that, and we have to be very mindful of how concentrated parts of our portfolios and certain segments are becoming to this AI trade.
Joseph, good to see you. Thank you very much.
Always a pleasure.
Taking time out from his $1 trillion in assets under management. We love guests like you. We appreciate it.